Wow, and this, apparently this is the smallest one, you know? I mean, I can live in there, you know, guys? What an amazing story, isn't it? Inspiring, powerful, depressing for the rest of us. What did we do with our lives? Guys, I wonder. And this woman not only is a sportswoman, she's also a businesswoman. She's not even 30, you know? No somos nadie, no somos nadie. She has no fear, you heard, no fear whatsoever. That's why she hasn't joined any parent schools' WhatsApp groups. That is real fear. Any parents in the room? May I see your hands? Who loves WhatsApp groups? School WhatsApp groups? Raise your hands. One guy. I mean, you just got married, obviously. You just have a little one. It's just first year of school. Just give it a few years. You know, your worst nightmare. But we're not going to talk about that now. We're going to talk about disrupting the financial sector, our favorite subject in South Summit, along with blockchain, scaling, along with, well, why not financial tech? Money makes the world go round, the world go round, the world. I'm trying to get hired, but they don't let me. Anyway, let's go to, I'm going to introduce our next speaker the way he deserves here from the stand. Can I get some lights here? It's terrible. Shall I go back? Lights? Yeah? No? I'm not getting any lights? I'm just here for the lights. Eugenia, I'm sorry. He's saying, no. Oh, back. I'm sorry. Sorry, they hate me here. This is el directo. Sí. Okay, sorry. Let's talk about disruption in financial services, shall we? Well, whether you like it or not, we're going to do it. Many think the greatest challenge that the banking industry faces today is the digital services created by the fintechs. Those fintechs, they're there, annoying the banks, yeah? But our next speaker is the man in charge with leading BBVA's creation unit. And he said, and I quote, "It's the shift from thinking about interactions with customers as transactions to actual human-based interactions and how we make those smart." And he adds, "This is about creating the future, or not just finance, but how people interact with money." Well, he's here to tell us how BBVA is spearheading innovation in the financial services. So please, let's welcome Derek White. Derek, woo! Marisol! You have your best fans here. Come on out. Woo! Derek, your fans are here, Marisol, Nacho, a lot of people from the family, eh?
Yes.
You want to join him, Marisol?
That's right.
He's a star. Okay.
Thank you very much. Hello, Madrid. Hello, South Summit. Hello, ecosystem partners. It is great to be with you. Thank you, Maria, for making this a possibility and connecting and lighting up the Madrid ecosystem, the Spain ecosystem. It's incredibly exciting to see what South Summit is creating, a platform for all of us to be able to connect and light up the Madrid ecosystem. If there's one thing that separates innovation ecosystems from any other ecosystem and the pace at which, the brilliance at which ecosystems operate, it's the connectivity. And that connectivity comes down to every single one of us paying it forward. And not necessarily looking at what's in it for me, but how can I help that next person, because that is what makes amazing ecosystems. And South Summit is playing the primary platform in connecting all of us, big tech, small fintechs, and big megacorps, to help create the future of not just Spain, but the future of every industry. So, I have the privilege today of sharing a couple of thoughts with you. 3 key things we're going to cover today is what are the trends that are happening out there? What do we see not just within banking, but cuts across literally every industry? And then as we look at those trends, how do we translate those trends into what can be defined as good in a digital business? I have the privilege in my job of working with some of the largest clients and executive teams in every industry, whether it's automotive, whether it's travel, whether it's communications, whether it's telcos. And as you meet with the executive teams in these businesses, and don't just talk about banking, but you talk about their business, their industry, we are all going through similar levels of disruption, similar levels of transformation, and everybody is seeking to become a digital business. So what does that mean, whether you're small tech, big tech, or a megacorp? And then lastly, I'll touch on how BBVA is doing this. And what's the BBVA story, and where are we in this evolution and vision that our chairman has established over a decade ago, talking about the role of technology, the transformation of technology in banking, as the visionary leader in the industry and voted as the best banker in the world. How do we take that and translate that into our story today? So those are the three things we're going to cover today. Let's dive into the trends that we're seeing out there today. But before we do that, here's a little teaser video. So with that as a teaser, let's talk about what are the trends that are impacting every industry. We all know that there is a blurring of industry lines. Those blurring of industry lines are being created by startups, by big tech, but it's also being driven by the consumers, the users. And one can debate how much of it is the users that are driving it. Is it a supply side or a demand side issue? But the fact of the matter is there is a blurring of industry lines, and I'll come on to that into a minute. That blurring of industry lines and the competition is really about where people are spending their time and where they're interacting. The evolution of digital is creating an explosion in the volume of billions and trillions of interactions. Those interactions, therefore, are generating additional data, and data generates insights, and insights and data create the opportunity for us to build amazing algorithms. So with all that, what does that really mean? If you look to the east and to the west, the evolution of the ecosystems in the east and the west are very, very, very different. Much of that is driven by regulation, and I would argue that here in Europe, regulation is actually serving as a catalyst for innovation, unlike any other part of the world. But let's talk about the East and the West and the battle for the creation of what are these ecosystems. We recently just took a team of 25 plus people to China to visit the ecosystem. What is the China? And no matter how much you read about it, no matter how much you study what's happening there, until you visit it and experience what is an ecosystem, it's like a physical transformation comes over people when they actually experience what's happening in this digital ecosystem that is China and how immersive it actually is. Because these ecosystems they're blurring in such a way that, as illustrated on the slide, Customers are spending time in this interaction environment that is blurring chat and social and media and e-commerce and gaming all into one platform, so you never have to leave it. Those used to be separate industries. They're now one common industry, and the battleground is for those interactions. Now, as those ecosystems, and each of these ecosystems try to scale their number of users, then the second thing they tried to do is increase the amount of time that people spend in the blur, and then eventually they figure out how to monetize it. The one thing that moves all of this, in between all of this, is money. Money has to move in the ecosystem, out of the ecosystem, back into the ecosystem. That's where the banking world starts to come into play. And depending on the maturity of the banking system in each market, determines how much that evolves and involves the banking system versus is created by these new ecosystem players. Because it starts with payments and the movement of money. And then as money starts moving around, then comes lending, because you can finance it. And then as lending starts to play, you start to look at the float that moves in and out and around in this ecosystem, and the likes of Eurobao, the world's largest mutual fund, and starts to exist. And then you get into other banking products. But as you can see, banking is very downstream in the interaction model of where customers are actually spending their time and where the blur is actually happening. And this blur impacts every industry and every person. So on this stage, just last year, there was a brilliant emerging unicorn rider that sat here on this stage, was interviewed by a great journalist, and asked the question, why did you start your business? That emerging unicorn rider responded by saying, because banks suck. And then he went on to tell how amazing his disruption is in dissecting a small piece of the value chain. But that has caused us to, and we hear this all the time, it sells papers to say things like that, it's quite vitriolic. But the fact of the matter is the battle between the ecosystems, the big tech and the fintechs today, and banks, all comes down to the battleground of human interactions. Big tech are focusing on high volume, high frequency, low value interactions. Banks and the industry of banking that started by building a foundational brick and mortar right at the center of a community has been built, an industry has been built on low frequency, low volume, high value interactions in an analog world. Now, if you start to take that into what we call the 1033,000 model, and you look at where people are actually interacting with their money today, the average person walks into a bank branch, let's be generous and call it 10 times a year. The average person visits their mobile banking application 300 times a year. And they interact with their money 300 times a year through mobile. But they're interacting in this blur, in this digital ecosystem, 3,000 times a year. So take this analog business model that was built on human-to-human interactions and the interaction model we have with 3,000, 10 versus 3,000. If you have 10 interactions per year with your customer, how many opportunities do you have to create amazing experiences with them? Versus if you have 3,000 interactions with them. Now, yes, they're very different interactions, but the battleground is interactions. When visiting Asia, you cannot help but hear the acronym OtoO. The internet businesses, the internet economy of China has been built on online to offline models. The ecosystem of WeChat, Ali, and others in China is built on an O2O model. This is further evidenced in the United States, where you see the recent developments of Amazon as well, moving from online to offline. What are their latest 3 moves that they have announced? Amazon Go stores expanding, Whole Foods acquisition, New York opening of the 4-star store, as Amazon, a digital ecosystem, now the 3rd largest advertising platform in the United States, is moving from online to offline. The world for the last 10 years has been talking about the shift in every industry moving from closed systems to open systems. This happens to be my daughter on a family activity called geocaching. I don't know if there's any geocachers out there. Do you have any geocachers in the audience? Yeah? Okay, we got a geocacher back here. Geocaching is the blend of online and offline worlds through an open platform like a Google Maps, where people can hide little treasures, find little treasures like this little red box hidden in the forest. For my kids and I to go on a walk, find a treasure, sign the physical box, post it in the digital platform, and it's an amazing family activity. That is all enabled by shifting from closed systems, closed architecture, closed platforms to open architecture, open platforms through APIs. And then you start from moving from APIs into the blockchain and distributed economy. And for us within BBVA, while we look at OtoO and C2O, and we're very advanced in the C2O world, we see the future very much, immediate future, very much focused on what we call I2O, and translation of interactions into opportunities for our customers to interact with their money in an entirely different way. So those are some trends. Now let's move into the second part of what I wanted to share today, and that is what makes a good digital business. Now I had the privilege early on in my career in 1998 of participating in the creation of the world's first internet bank. We did the world's first internet marketing, the first interstitial banner with a double click that generated 60,000 accounts the first day we did it. And having seen the impact of how digital businesses are built, there are 3-4 key things that I would suggest to you, whether you're a small business, a startup today, whether you're a megacorp, and regardless of the industry in. Today, in the day that we operate in, especially for established businesses that are trying to move from the analog world into a digital world, the number one rule is DIY. Everything should be designed around the human user, the human that makes the decision, whether it's a treasurer in one of the world's largest corporations making a decision about that company's money, or whether it's a grandma making a decision about her money and how she passes that on to her family. It's about DIY and how we move from, and when measuring DIY, the baseline has to be 100% DIY where legally and regulatorily allowed. To bring that to life for you, 2 years ago we measured within BBVA the top 50 reasons why a person, would leave their office, would leave their home, and take the time out of their life to walk into a physical branch versus why can't they do it by themselves on this in DIY. Measuring those top 50 things gave us incredible insight to where we've now been able to move that through the best mobile banking application in the world for 2 years running, has created 94% of the reasons why you would want to walk into a branch. You can now do it on your mobile device, sitting at home in less than 90 seconds. The principle has to be 100% DIY. And then once it's 100% DIY, it's looking at every one of those experiences and recognizing and understanding what is the customer effort score. How much effort does the customer have to put into actually designing or to do what they want to do? Because one click can lead to 20% abandon rate, which is the 1 to 20 on here. We design DIY around our 3 C's, which are our customers, our clients, and our colleagues, and we do it in a way that creates 10x experiences. I'll give you an example of what a 10x experience is later, of how you integrate things that may be dissected by fintechs into 10 different experiences, things that might be broken up into various parts of our life, and our life goals are fragmented into 10 different experiences, how you bring that together into one. The second, if DIY is the first principle for any digital company, any digital business, the second principle is smart interactions. And recognizing that businesses are moving from selling of individual products and millions of interactions into billions and trillions of interactions. And in a digital world, we have the ability to measure how smart those interactions are. Many, many years ago, McDonald's did this brilliant thing of just asking what could be considered in a digital world, a pretty simple or a dumb question, and that is, do you want fries with that? For a small token, they were able to move the needle by simply asking a question that is not tailored and personalized to any individual, but by measuring every interaction and billions of interactions, basis points of how a customer reacts and what is offered to them can have a huge impact on the overall business. And then it's about looking at billions of interactions, the basis points impacts of that experience with them, how smart those interactions are. Then it's about what's the wow factor. Do they walk out of that experience wanting to talk to their friends and feeling like you've helped them solve a problem that they could not solve themselves or experience something for themselves? So DIY in the basic of evolution of a digital business is the baseline. Then as things become digitally available, then you make them smart. And I'd love to go into that a bit more, but we don't have time. Once they become smart, we then start to look at the evolution of the industry into an autonomous, self-driven experience. The automotive industry, and we have most of the world's automotive players as our clients, and as we work with them and talk with them about the future of the automotive industry, as well as the startups that are disrupting this space, the automotive industry, as you all know, has defined 5 levels of autonomy. And the industry is currently somewhere between level 2 and level 3 of autonomy. Level 4 of autonomy is 6 to 8 years away. The advancement and the speed at which the industry, the automotive industry, is moving into autonomy is not based on the radars, it's not based on the sensors, it's not based on the speed and time in which those sensors can recognize and can respond. The delay in the evolution of the autonomy of the automotive industry in moving from levels 2, levels 3, 4, and eventually to level 5, which is an entirely autonomous vehicle that does not require any human inside, but can move entirely by itself on our public roads. In order to achieve that, it's all about the brain. It's about the data and the ability to process the information in such a way that meets expectations and standards. We are, within BBVA, defining the 5 levels of autonomy of banking. And I would suggest that the banking is at about a level 1 at this stage in comparison to an automotive industry that's at about a level 2 or 3. If we had time, we could get into where we see the evolution of the self-driven bank account and the autonomy of where we're headed as an industry. Now we start to move from, okay, if that's what's happening if that's what's kind of required for a digital bank, how does a bank like BBVA, or if that's what's required for a digital company, or what makes a great digital company, how do we translate that into BBVA? And once becoming DIY into smart, into autonomous, then the need for a digital company is to operate in what we refer to as the SIM. All of us as individuals have a SIM that allows us to connect with others. We may have a dual SIM or a single SIM. But a SIM is the speed at which we operate, the way in which we can iterate, and what we measure. That's what we define as our SIM. That SIM, we use having the ability to measure all of our key metrics on our mobile device through Domo, through the likes of Salesforce, and be able to do it real time, wherever I am, on the plane, on the train, or at home. Being able to have that real time with me and be able to translate that into the creation of how we create the future of the business is absolutely essential. And I'll bring that to life as to how we're actually doing that. For us, within BBVA, it comes down to 3 key things. The first is the translation of interactions into opportunities. The second is around human-centered innovation. And the third is the translation capacity of the organization, the speed at which the organization can take that amazing idea trapped in someone's head or that may have been thrown out in a meeting and translate it into, in Spanish, as we say, en las manos de los clientes. Sorry for my poor Spanish. In banking, And across every industry, there is this measurement that is referred to as the Net Promoter Score, NPS. Net Promoter Score measures the satisfaction of an experience a customer just had with us. It's a lagging indicator of their happiness factor. Did they really enjoy it? How amazing was that experience? That's Net Promoter Score. Within BBVA, we try to not just look at the lagging indicators, but also look at the leading indicators. And I would suggest 3 things that identify the leading indicators that help us translate these ideas and these interactions into opportunities. The great Chilean barefoot economist defined 9 key needs that humans have. And you can look at various things, but we look at the 9 key needs that a human has. Invariably, all of those needs tied to money in some way, shape, or form. Understanding that is important when you then start to look in every interaction. And if you look at the second thing that the big techs are looking to do, they're looking to increase the amount of time or measure the amount of time that people spend doing whatever it is they do. And you can break the day down into the 3/8, and any one of those 3 infringes on the other in some way, shape, or form. But understanding where people are spending their time, especially in this 3,000 interaction ecosystem world, where they spend their time, how they are interacting with people in a Fortnite distributed interaction model, the Fortnite game that our kids are now addicted to, for many of you. It's changing the way that we all interact and how we spend time together. The last thing is looking at what causes stress. Because if we understand where people have needs, where they're spending their time, what really works them up? Because people react entirely differently based on stress. Understanding these 3 things all play into how we create product and how we do human-centered design. Now let me bring this to life for you through an experience that we call BBVA Valora. Now many of you are from Spain, many of you from out of Spain. Those of you that are, regardless of where you're from, you've probably fallen in love with Spain and Madrid, just as I have. I've had the privilege of living in this great city now for 3 years, and I absolutely love it. My wife, my 4 children, and I absolutely love every bit of Madrid. Now, if you don't call Madrid home today, BBVA Valora can help you call Madrid home by creating a 10x experience. An experience that what we understand through NTS is that the number one thing that the largest purchase that people will ever make in their life is typically their home. And in searching for their home, through BBVA Valora, you can simply lift your phone up and search the walls of any street of Spain, identify behind those walls which of those apartments and or homes may be available. Not only are they available, but what is your affordability? Can you afford that experience? What are the schools like? Integrating internal and external APIs and data to be able to open up the opportunities of understanding what's the community like. But not only that, moving beyond that to understand what would the potential reformation costs be? What are the insurance costs? All of that integrated into one experience instead of 10 separate experiences, all done through augmented reality by simply scanning the walls of any street in Spain. Just one simple example of how we're doing it, and there's many more like our BBVA Baby Planner and others that focus on people's life goals and life decisions of creating their family and the stress that comes with the first unknown of what it's like to have your first child. So how does BBVA actually do that? I would suggest when asked what are the competitive advantages of BBVA as an organization, I would suggest that this is our greatest competitive advantage. The pace at which we can align the thousands of colleagues we have in the organization to create at scale and at speed is our secret sauce. And we measure. The key things on the left-hand side is our methodology. We have what we call a single development agenda, is the SDA, is how we look at where we spend all of our money, where we invest our financial capital and our human capital. How we do that is in a model we define as the 3-6-9. If you have a great idea, Whether you're a team member or you're the leader of an organization, if you have a great idea and you just want to get that in the hands of your customer, en las manos de los clientes, as fast as possible, we follow a methodology that is 369. If you have an idea within 3 days, if it's a great idea and it's something that's going to move the company, that's going to resonate with the customer, and you've just got to get it done, you should be able to, within 3 days, be able to form a triangle team, what we define as the triangle team. 3 days, you should have the human capital aligned in order to move it forward. You then should give that team, we operate thousands of projects, so we give them 6 weeks. When you're dealing with thousands of projects, you give them 6 weeks to create a prototype. Now, the big techs and some of you fintechs can do that in 6 hours. We give the teams 6 weeks to produce a human-centered prototype of what it is the customer is actually going to receive. And then the 9 is when it lands on las manos de los clientes. It has to be delivered within 9 months. The average cycle time and creation time in the banking industry, in the financial services industry, this cycle is 2.2 years. Our cycle, while we have a methodology of 369, our cycle is 7 months. I would explain the triangle, but that's how we organize the human capital. I'll just move on from that. I've already explained EMCs. By measuring this, by introducing this methodology into the company, we have landed the numbers of features, experiences, and the amazing that our customers have experienced by 4 times. Let me bring us to life with this video.
This is how we dream. Come with me and learn to fly. We can sail together, sail across the painted sky.
Those are just a couple of examples. Now, where are we going in the future, just in closing? There are about 20,000 banks in the world today. Soon there will be dozens. As we move from 20,000 to dozens, we are moving into a place where we've been a great bank for 187 years. We're now a digital bank with more than 50% of our customers operating on our platforms in digital. We're moving into becoming a digital company. And as we evolve into a digital company, we're looking to operate in a decentralized economy. We're here today at South Summit as sponsors of South Summit because we're here to work with you and the ecosystem to create this digital company. We know we can't do it alone. We don't want to do it alone, and we invite all of you to work with us as we create the future of banking, but also, more importantly, today here at South Summit, how we create the ecosystem that is Madrid and that is Spain. And thank you all.